we can see is number of new 52-week highs versus number of 52-week lows. That balance in terms of breadth. And again, what we want to look for is not only positive breadth, but that transition where we go from positive to negative. And so what we can do is, again, if we look at, for instance, what has happened since about June, more stocks have been making 52-week highs, but as of recent, again, a little bit of a sell-off. And I see over here, right, more stocks were making 52-week highs, but here we see we fell below. So that would be more negative breadth. So again, I can come back, go to a comparison, turn on the Nasdaq, right? There it is, Nasdaq Composite, and do that analysis. And this is what we want to look for, these divergences. Here we can see the Nasdaq is making new all-time highs. What is our breadth? Our breadth has fallen. Our breadth has turned negative. This is warning us that the condition of this trend is at risk. Notice that recently, right? Market was making all-time highs. Right as we made all-time highs, our breadth turned negative. That is telling us that more stocks were falling, even though the index itself was rising. So that would put us at risk. All right, the next thing on our checklist that we're going to look for is something going back to our advance and declines. Again, that is found on our market momentum page. And this kind of gives us a perspective on a daily level. But again, what we want to kind of do on this one is we want to look at, again, those 52-week highs and lows. We want to look at shares. That's our volume, our breadth volume, and our issues would be the number of individual stocks. Now, on any given day, what you're going to see is the market's going to range somewhere between 45 and 55 between the advancing and declines, or 40, 60, something like that. When we get above, let's say 70, 80, or even 90, that could be a very strong indication of breadth, either advancing or declining. Now, we want to be aware of extremes, 9 to 1, 90% versus 10%. Those usually are moments when the market has either exuberance or maybe some type of capitulation. And they could be counter trend indicators.